Today, we saw the markets making new all-time highs. However, once Powell came out, we seen the markets going down and then NASDAQ forming a hanging man candle. Now, we come over and look at the fear and greed index. Right now, we're at 43. We are still over in the fear territory. However, every day we keep making new all-time highs. We come over and look at how the Nifty fared across the board. The Dow was down 74 points. The NASDAQ was up 130 points. S&P 500 down 0.30, with the Russell 2000 being down 2.1. But notice, as we made new all-time highs today, look at advancing issues versus declining. We had 71% of issues declining on the day. Then when we come over and look at the sectors across the board, we had a majority of sectors in the red. We had communication services and technology in the green. However, the laggards out there, consumer defensives and real estate. And when we come over and look at the dollar index, everybody was thinking that when Jay Powell went ahead and cut rates, we see the dollar actually going down and we see gold on the move back up. But notice what gold did today. Came right into our little box area. Over here on the 4-hour chart, we're still tracking this for a move all the way down to 3,800. Now, this box is nothing more than a structure breakdown point. Basically drew it out from the candle wicks right up here to the candle bodies. We came into it, we got the rejection, and today on the live stream, we had this area mapped out. This white line going across the screen. I said if we break below that, quite probable we are going all the way back down towards the low. So let's see if I'm going to be right on that trade call. Now today we saw the market make a new all-time high, but then we see right here, Dow drops 200 points, giving up gains after Powell signals Fed may not cut again this year. Now we do have 41 days until the next FOMC meeting. However, when we come over and look at the Fed watch tool and what the market is pricing in, even though Jay Powell may have said the Fed is not guaranteed to be cutting rates in December, we can see the market's pricing in a 65.9% chance that yes, indeed, Jay Powell and company will be cutting rates at the next FOMC meeting. Let me know in the comment section down below. Do you guys think Jay Powell will be cutting rates at the next FOMC meeting? Or do you think he's going to hold rates where they are? Now, the next 2 days, we have a lot of earnings coming out. We have Meta, Microsoft, Alphabet, Chipotle, Starbucks, all after the bell. And then tomorrow we have Amazon, Apple, Coinbase, and Reddit. And let's not forget, when we look at the big expected movers out there for today, Starbucks plus or minus 9%. We have Meta right around the 7% and Google right around 6.5%. Well, if we come over and look at Starbucks after the bell, up 3.18%. Pretty good rocket ship on the way up. We come over and look at Google, big push on the way up. However, we've already come back and undone 50% of that candle. But at the time of recording this video, we're still up 3.94%. We come and check in on Meta. Meta, yikes, down 6.27%. And then we come over and look at Microsoft, also down roughly 3.43%. So the question is the market finally topping out? We come over and look at the Dow Jones. We see the Dow Jones close lower than the prior day. We come over and look at the Russell 2000. We can see now the Russell 2000 has closed lower than the open on the last 3 days. But then we come over and look at the NASDAQ. Where the NASDAQ closed was still in the upper third of the range. However, after hours, we do see that we are down here just a bit. Now, if we dive down and start looking at the 4-hour chart, the MACD indicator is still looking extremely strong. On the 30-minute chart, we've already had the bearish cross. And keep in mind, we've had 1, 2, 3, 4 consecutive days where we gapped up. And today is the first gap that finally came back and filled. Now, we come over and look at the futures markets real quick. Look at the NASDAQ on the 4-hour chart. All the way right over here from the low on the 22nd, we really have not had a pullback. We had a couple bar consolidation. And then today we get this whipping effect during the FOMC meeting. So we'll see, do we start to get a more meaningful pullback, maybe down towards gap support? Or let's not forget, we still have that untested value area high from the prior week. When we come over and start looking at the volume profile levels, notice today, once again, we failed to take out the point of control. So now we have had 5 consecutive untested point of controls. And when the market opens up tonight, we're going to have a 6th untested point of controls. And I got to be honest with you, I can't remember the last time that has occurred. Now today, we finally broke the streak of not testing out the P point. Once Jay Powell came out, we saw the market flush down. We tested out the P point. However, we barely missed hitting that point of control. Now, I still think that we are in a topping process. And if that's going to be the case, look at what we did after hours. The market spiked up, took out the all-time highs, and then we came right back down into that range. Now, when we come over and look at the economic calendar, what do we really have in store for tomorrow? What could be a big market moving event that could shift the market? And honestly, I don't really see a whole lot. So if we're going to have a huge change in the market, it's going to have to be something to do with earnings out here. So here's how I want to play this tonight or tomorrow. If we're trading below value or low, I want to target this point of control down here at 26,039 and a quarter. In the event that tonight we're trading above 26,300, then I want to see, can we push maybe back up towards the high? But if we start coming back down, watch out for the point of control to get tested. Watch out for value area low, and then see if we can start picking off some of these untested point of controls all down below us. Now we come over, look at the SPY real quick. Yesterday we had a doji candle. Today we have a hanging man candle. And this is what I like. If we're going to get a hanging man candle reversal, I like to see when we have other supporting candles around it. For instance, yesterday we had a doji candle. Maybe tomorrow we open up here, we get a bearish engulfing candle, and then we can start working on some of these lower gaps. MACD indicator on the daily chart right now is still extremely strong. On the 4-hour chart, you can start to see a little bit of a roll effect of the MACD indicator. But if we look at the distance between the two lines, still very, very strong. Now, one of the areas I'm watching is we want to pull a Fibonacci retracement of this last leg on the way up. Now, if we do go higher tomorrow, we'll simply have to drag the Fibonacci retracement up. But from what we're looking at right now, the 38% retracement would make sense for a logical retracement, 679.74. Below that, I look down here for the gap to be filled and down towards that 50% Fibonacci retracement. Ideally, I'd like to see us come all the way down here towards this high volume node at about 671.96. And that would take care of a lot of these gaps that we've had over here in the stock market. Now we come over and look at the 30-minute chart. We have a P as in Paul shaped profile. So tomorrow, if we're trading below value or low, highly probable we come back down to the lower third of the range. And then we start breaking that. We look for the low of today to get tested. And then simply just look back at some of these gaps and see, can we work back and start filling those gaps? I want to make everybody aware right now, Tradeify 45% off all Lightning accounts, which is a straight SIM funded account. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. Now, when I come over and look at the futures markets real quick, on the 4-hour chart, we have a nasty wick on the bottom of this candle. We almost made it down towards that gap support area. However, we did not get enough selling pressure down there. And I think a lot of that had to do with the earnings after the bell. Then we come over and start looking at the daily profiles real quick. We can see today, well, we were able to go ahead and test out the P point. We made it all the way down towards the point of control, and then the market rejected, boom, right back up. But some of the areas I want to watch is, notice where we have this minus development area. Do not be the slightest bit surprised if we spend a little bit of time around this area tonight or tomorrow, kind of build that area out. Now, if we start breaking below value area low, 69.17 and 3/4, then I want to turn my attentions back down towards the lows of today, back down towards gap support from the gap up on Sunday night. And then can we make it all the way down here, potentially fill in the gap? Now, in the event that maybe tonight or tomorrow we start breaking value area low, then we start getting above it, then I want to turn my attentions towards the point of control, 6939.50. Above that, right up here towards value area high, 6948.50. Anything above that, we're going to go ahead and run and make a new all-time high. However, I do want to caution you guys real quick, because let's not forget, the market just finished completing an A to B equals C to D pattern, and we actually even overshot the 100% level. After the market completes an ABC pattern, it normally does something other than continue in that direction. That could be the market consolidates around this area, or the market starts to pull back, and where the market might pull back to makes sense right down here towards gap support, and then maybe down here towards filling the gap. And then if things really get ugly out here, all the way down, retesting value area high from the prior week at 6785.50. Now let's go ahead and grab the Fibonacci retracement tool real quick. We can measure from the swing low right up here to the high. Now, assuming we don't go any higher, and at this point that is an assumption, but right now the 38% retracement would be the first area on the move down where we would expect the market to maybe hesitate, either consolidate there or even bounce out of that area. And if you notice, that would come right in the middle of the gap. So if you are looking for the entire gap to come all the way down and be filled, just be mindful of that area, as that could be an area where the market starts to chop around or even bounce out of that area. Now, if you guys trade with prop firms and you copy trade, there's a huge update with this one trade copier that is an absolute game changer. To see what that is, watch this video right here.